This is Kevin. Welcome to the next video of my small time investing video series. Disclaimer, I am not a financial advisor. I only do small part-time investing casually for fun. There are many things I don't understand in depth, so there could even be a few things in this video that are inaccurate. This video is on ETFs. What's an ETF? It's an exchange traded fund. So it's exchange traded fund. That's what it stands for. It's a collection of stocks. You buy these like you would buy a single stock. I consider buying ETFs relatively a little bit riskier than buying a GIC, since you have no guarantee for profits. The G in the GIC stands for guaranteed. So ETFs are generally less risky than buying a single company stock because your risk is spread out over many stocks in a collection of stocks in an ETF. So with less risk, the upside is generally a lot lower than a company stock. The growth is small and steady over a long period of time. So if your risk tolerance is higher than GIC but lower than company stock, the ETF risk sits in between the two. So you may consider buying ETFs. ETFs are managed by large financial companies like Vanguard, BlackRock, or some of the major banks. For Canadians, some ETFs are traded in Canadian dollars in the Toronto Stock Exchange, and some ETFs are in US dollars traded in the US exchanges. Every ETF has management fees, holdings of stock, and percentages. So you can Google an ETF to see its management fees and holdings. The holdings list may show, for example, like Microsoft, MSFT, 10%, Facebook, FB, 5%, and there'll be a whole list of stocks and its percentages, and there'll be a whole bunch of other stocks and decreasing percentages in the holdings list. So after you see the holdings list for an ETF, you can buy individual stocks in the holdings list on your own separately without buying the ETFs at all. As long as the stock is available through the stock exchanges like New York Stock Exchange or NASDAQ, or that you have access to. And you don't even have to buy that ETF. So that is an option for you. However, some stocks are very expensive. So buying an ETF with an expensive stock in its holdings might be worth considering. So for example, Berkshire Hathaway Class B stock is $456.51 per share as of this video. In a Vanguard Financials ETF, VFH symbol, it holds the Berkshire Hathaway Class B stock, and the VFH is $120 as of this video. So $120 versus $456.51 is it's a lot more affordable, but you get a much smaller piece of a share rather than a single share of Berkshire Hathaway Class B, and you're buying a whole collection of stocks along with it. So it is possible some ETFs have foreign stock outside of Canada and US that you cannot buy through exchanges that you have access to. I don't know too much about it. And also, you may come across inverse ETFs. What's an inverse ETF? These allow you to potentially profit off of decline in value of its stock holdings. So like when the stock price goes bearish, so you may want to hold on to these ETFs only for short periods, because markets generally rise over a long enough period of time. So inverse ETFs, also known as short ETFs or bear ETFs, is something you can buy to get profit when you're expecting a decline in its stock holdings. So let's look at the VFH ETF. So if you Google it, you'll see results, and this is one of the results from Yahoo Finance. So holdings VFH, and it shows a list of top 10 holdings. You got JP Morgan 8.5%, Berkshire Hathaway Class B 7.71%, MasterCard 5.29%, Visa Card 4.52%, and so on. And that's your top 10 list. So yeah, Berkshire Hathaway, as I mentioned earlier, very expensive stock, right? VFH is right now, as of this video, it's just about $120 USD. So if you look at Berkshire Hathaway Class B, $456.51 compared to $120. So that's the difference. And so, yeah, you can totally choose to buy an ETF with Berkshire Hathaway Class B stock in it. So that is a choice. And so let's go to Trading View. So I've got my VFH ETF here, just about $120, $119.27 is the last price. Today is Saturday, so this was closing price yesterday, Friday at 1 o'clock. So let's say I want to buy I want to buy 10 of them. So I would enter 10 here and hit buy. If I want to pay for just market price for it, or you could hit the limit choice here. So instead of $119.27, I might want to only buy it at $110, 10 units. And I was explaining limits in the last video, how you can set a limit lower than the current market price to get a better deal. So you would hit the buy button here to send an order for $110 limit. So in my example, I'm just gonna go with the market price, 10 shares of this ETF at $119.27. $0 commission, and that's the total. So when I buy ETF in my Questrade self-investing TFSA, it's free, commission free. So when I sell it, let's say my limit price is $130 for me to sell it. So 130. So I would hit sell and put in the order to sell this after I've bought it. So, and the commission for my Questrade self-investing TFSA is $4.95 per transaction for selling. So the commission for ETFs are usually cheaper, and cheaper commission is another thing to consider when you're thinking of buying ETFs. So versus company stock, although the difference in commission isn't too huge. So, and in this scenario, if I sell it, if I buy it for this, sell it for this, the profit is $102.35. So a tiny profit. So yeah. Also, disclaimer, I don't work for Questrade either. I'm just a customer of them as my broker. So that's all I have for ETFs. So thanks for watching.